A seemingly simple fruit is at the center of a complex and unfolding trade drama. The humble lime, a staple in kitchens and bars across America, has become a surprising point of contention. In recent months, a significant number of lime shipments destined for the United States have been turned away at the border, creating ripples of uncertainty throughout the supply chain. This isn't just about a few bad batches, it's a systemic issue that has left importers scrambling and consumers asking why their favorite citrus is suddenly caught in a web of regulations. The story begins where so many products do, at the point of entry, where rigorous checks are revealing problems that can no longer be ignored. These rejections have sent a shockwave through the United States produce market. For decades, Americans have enjoyed a steady and affordable supply of limes, largely taking for granted the journey from farm to grocery store. Now, that reliable flow has been disrupted. Reports from major ports of entry from Texas to California indicate a sharp increase in shipments being flagged for failing to meet stringent United States quality and safety standards. This isn't a minor hiccup. It represents a significant disruption to a multi-million-dollar industry, raising critical questions about agricultural practices, supply chain vulnerabilities, and the very standards we rely on to ensure our food is safe to eat. The rejections are not arbitrary, they are the result of a vigilant system designed to protect American consumers and agriculture from potential threats. So what exactly is causing these shipments to be turned away? The reasons are multifaceted, rooted in a strict regulatory framework designed to safeguard public health and the nation's agricultural integrity. A primary cause, pesticide residues exceeding EPA limits. Scientists examining a lime under a microscope for signs of disease. The United States has a zero-tolerance policy for certain chemicals and stringent maximum residue levels for others. When FDA inspectors test samples and find unapproved substances or concentrations above the established threshold, the entire shipment is denied entry. This is a non-negotiable line in the sand, a critical measure to protect consumers from potentially harmful chemical exposure. Another major factor, pests and diseases. The United States Department of Agriculture's Animal and Plant Health Inspection Service is constantly on the lookout for invasive species that could devastate American crops. Citrus canker bacterium, Asian citrus psyllid, the insect that spreads fatal citrus greening disease. If inspectors discover even a single sign of a quarantined pest or disease on a shipment of limes, protocol dictates that the entire lot must be rejected or subjected to costly fumigation treatments. Fumigation or rejection, costly and immediate. These measures may seem extreme, but they are essential to protecting the multi-billion-dollar United States citrus industry from catastrophic outbreaks. Weather events have also played a significant, albeit indirect, role in the quality decline of some lime shipments. Unusually heavy rains or prolonged droughts in certain growing regions have stressed the citrus trees, making them more susceptible to fungal infections and blemishes. Conditions like post-bloom fruit drop or anthracnose can affect the cosmetic appearance and shelf life of the limes. While some issues are cosmetic, others can signal underlying health problems in the fruit. United States import standards include strict grading for quality and condition. Fruit that is discolored, misshapen, or showing signs of decay is often rejected before it ever reaches a warehouse. Finally, simple non-compliance with administrative trade rules can halt a shipment in its tracks. This can range from improper labeling and missing documentation to a failure to adhere to specific packaging requirements designed to prevent contamination. Every piece of paperwork must be in perfect order, detailing the origin, grower, and phytosanitary certifications of the produce. Any discrepancy can lead to delays and ultimately, rejection. As the United States has tightened its grip on incoming lime shipments, a significant market gap has emerged. Empty supermarket shelves and worried buyers. Mexico rushed in. Vast, sophisticated lime industry, rapid harvests and packing lines. This isn't a coincidence, it's the result of years of investment in quality control, sustainable farming practices, and a deep understanding of the United States market's exacting standards. Key growing regions, Veracruz, Michoacan, premium types, Persian limes, key limes, meeting and often exceeding USDA requirements, FDA requirements. This readiness has allowed them to capitalize on the current trade disruption in a massive way. Certification programs like Global Good Agricultural Practices, Protocol, Soil Management, Protocol, Water Use, Protocol, Pesticide Application, Protocol, Worker Safety. These programs ensure traceability from farm to fork, giving United States buyers a high degree of confidence in the product's safety and quality. By aligning with international standards, Mexican growers became the go-to source for reliable, high-quality citrus. Strategic positioning has translated into enormous financial gains. With other suppliers struggling, United States importers turned to Mexico for a stable supply, leading to a surge in new and expanded trade deals, contracts collectively valued in the billions of dollars. Mexican agricultural officials reported a significant uptick in export volume to the United States in 2025. This influx of demand has been a monumental boon for the Mexican economy. The financial and logistical impact of this shift in the lime trade is staggering. Before the recent wave of rejections, the United States imported limes from a more diverse portfolio of countries. Now, the data shows a dramatic consolidation. According to the latest figures from the United States Department of Commerce, Mexico's share of the United States lime market has surged to nearly 95% in the first half of 2025. This represents a 15-point increase from the same period just 2 years ago. In monetary terms, this translates to an estimated $1.2 billion in lime exports from Mexico to the United States annually. The numbers paint a clear picture of a market in rapid transition. This surge in demand for Mexican limes has also affected pricing and volume. While the increased supply from Mexico has helped prevent a catastrophic price spike for United States consumers, wholesale prices have still seen a modest increase of about 8 to 10%, according to industry analysts. This is due to the heightened logistics costs and the premium placed on certified high-quality produce. On the supply side, Mexico has ramped up its export volume by an estimated 200,000 metric tons this year alone to meet the soaring United States demand. This increase has required a significant mobilization of resources, from harvesting crews to packing facilities and transportation networks, all working in concert to move the fruit across the border efficiently. The rejections of shipments from other sources have had a clear and quantifiable negative impact. Data from United States Customs and Border Protection shows that several hundred metric tons of limes from other regions have been denied entry in the past 6 months, a value estimated to be in the tens of millions of dollars. For the importers who own that product, it represents a total financial loss. The rejected fruit often must be destroyed or re-exported at the importer's expense. This financial risk has made many United States buyers hesitant to source from regions that have a track record of compliance issues. Looking at the broader economic picture, this trade shift underscores the importance of regulatory alignment in global commerce. Mexico's success is a direct result of its industry's decision to invest in meeting United States standards. This has created a more resilient and integrated North American supply chain, but it also highlights the vulnerabilities of relying so heavily on a single source. While Mexico cashes in, the situation has created a complex and often difficult environment for American businesses. For U.S. lime growers, primarily located in Florida, California, Texas, the market dynamics have been a mixed bag. On one hand, the disruption in imports from certain foreign competitors has, in theory, created more space for domestic produce. Some American farmers who can meet the high demand for quality and volume have seen a short-term increase in orders. However, the domestic lime industry is relatively small and simply cannot produce the massive quantities needed to satisfy the entire country's appetite, which keeps them from fully capitalizing on the situation. The real struggle is felt by the U.S. importers and distributors who had established supply chains with countries now facing high rejection rates. These businesses are facing significant financial losses and operational headaches. A rejected shipment is not just an inconvenience, it's a catastrophic event for a small or medium-sized importing company. They are left to absorb the cost of the lost product shipping and potential disposal fees with little to no recourse. Many have been forced to quickly pivot their sourcing strategies, severing long-standing relationships and scrambling to forge new partnerships with Mexican suppliers, which can be a difficult and time-consuming process. This disruption has also exposed the fragility of the just-in-time inventory model that many in the produce industry rely on. Some smaller importers, unable to weather the financial storm of multiple rejected shipments, have been forced to scale back operations or, in some cases, shut down entirely. For the American lime farmers, the dominance of Mexican imports presents a long-term challenge. Even with the current quality issues from other nations, they are still competing against a neighboring country with a different cost structure. To get a clearer picture of this complex issue, we've turned to the experts and officials on the front lines of agriculture and trade. Dr. Elena Ramirez, a leading agricultural economist at the University of California, Davis, provides some context. She said, "What we're seeing is not a sudden crisis but the culmination of long-term trends. Mexico has been investing heavily in food safety and quality certifications for years. They saw the stringent United States import standards not as a barrier, but as a blueprint for success. This preparation has allowed them to step in seamlessly as other suppliers have faltered. It's a classic case of market readiness meeting opportunity." A high-ranking official from the USDA's Animal and Plant Health Inspection Service, who spoke on the condition of anonymity, confirmed the stringency of their process. "Our mission is to protect American agriculture and consumers. It's that simple," the official explained. "Our inspectors are highly trained to detect prohibited pests and diseases that could cause billions of dollars in damage to our domestic citrus industry. The increase in rejections is a sign that our system is working as intended. We don't take pleasure in turning away shipments, but we will not compromise on safety. We maintain open communication with our trading partners to help them understand and meet our requirements." On the business side, the reaction is one of pragmatic adaptation. Maria Sanchez, CEO of a major United States produce import company, shared her perspective. She said, "It's been a challenging period. We had to pivot our entire lime sourcing strategy in a matter of weeks. The financial hit from the initial rejections was substantial, but the market demands consistency. Our customers, the grocery stores and restaurants, need to know they can get limes every single day. From Mexico, the sentiment is one of proud accomplishment. Their commitment to certified quality has made them the only viable large-scale option for us right now. It has been a tough lesson in supply chain diversification. We are proud to be a reliable supplier for our most important trading partner, the United States. This is not a temporary trend. It is the new standard for the North American agricultural trade." When we talk about lime quality, it's essential to understand that both the United States and Mexico produce excellent fruit. The differences often lie not in the inherent quality of the limes themselves, but in the scale, climate, agricultural systems. United States lime production is concentrated in smaller boutique-style groves, primarily in Florida. These farms focus on specific varietals and benefit from being close to market, picked at peak ripeness and transported quickly. American growers operate under strict environmental and labor regulations, producing safe, high-quality fruit often marketed as locally grown. Mexico's lime industry operates on a vastly different scale. A climate that allows multiple growing seasons makes Mexico a production powerhouse. Mexican growers have mastered the Persian lime, dominant in the U.S. market, hardy, seedless, with long shelf life. Top Mexican export farms use irrigation, integrated pest management, post-harvest handling, producing limes that are juicy, blemish-free, compliant with safety standards. The big differentiator is rigorous certification and verification by Mexican exporters. That drove widespread third-party audits and certifications, Global GAP, Primus GFS. These create a paper trail that U.S. importers value. After prior rejections, buyers want assurance. From a consumer view, differences are subtle. Persian limes, larger, smoother rind, very juicy, milder. Florida key limes, smaller, more intense and aromatic. Both countries make top-tier fruit, but Mexico's certified scale is winning the market. That is translated into large export containers of limes bound for the U.S. For most consumers, the differences are a matter of taste and marketing. Third-party certifications created the trust needed after rejections, giving essential assurance after prior rejections. From a consumer view, differences are subtle. From a buyer view, traceability matters. U.S. farms meet domestic laws, but Mexican exporters had to prove compliance to a foreign government. That drove audits and standards that reassured American buyers. Bottom line, both regions produce quality fruit. Buyers will favor certified, traceable supply. Narrator: the ripple effects of the lime trade shakeup have reached the aisles of American grocery stores and the menus of local restaurants. Narrator: for consumers, the most immediate and noticeable impact has been on price and on availability. Narrator: it was less severe than initially feared thanks to Mexico's intervention. Narrator: in the early weeks, some stores faced temporary shortages with empty spaces where limes should be. Narrator: It was less severe than initially feared thanks to Mexico's intervention. Narrator: In the early weeks some stores faced temporary shortages. Narrator: Prices rose modestly, a few cents per lime. Narrator: It wasn't devastating, but it got people talking. Narrator: Grocery store chains and produce managers have had to be nimble. Narrator: Many strengthened ties with suppliers who work directly with certified Mexican growers. Narrator: Our priority is to keep the shelves stocked for our customers. Narrator: We've had to communicate more closely with our distributors to ensure we get our allocations. Narrator: We've also emphasized suppliers who can show safety certifications. Narrator: That gives customers peace of mind. Narrator: Some stores added in-store signage explaining the situation and highlighting Mexican lime's quality. Narrator: For restaurants and bars the impact was more acute. Narrator: Limes are critical for cocktails like margaritas and mojitos. Narrator: And countless food recipes. Narrator: Some owners called multiple suppliers to secure daily orders or made emergency runs to retail stores. Narrator: For a couple of weeks it was tense. The price from our supplier went up, and one day they couldn't deliver our full order. Narrator: We can't make our signature margaritas without fresh limes. Narrator: The supply eventually stabilized, but it was a wake-up call. Narrator: Overall, consumers showed understanding since there was no full-blown shortage. Narrator: Messages about quality control and safety inspections resonated. Mexican replacement limes proved high quality, easing the transition. This major shift in the United States lime market is more than just a temporary disruption. It signals a new era in agricultural trade, one where verifiable quality and safety compliance are the most valuable commodities. The future of lime imports to the United States will be heavily shaped by the lessons learned from this episode. Importers will almost certainly diversify their sourcing portfolios less and consolidate them more, favoring suppliers and countries that have a proven certified track record of meeting stringent United States standards. The risk of having a multi-million-dollar shipment rejected is simply too high to do otherwise. This gives Mexico a powerful long-term advantage, and sets a high bar for any other country wishing to compete. This gives Mexico a powerful long-term advantage. It sets a high bar for other exporters. We can also expect to see a greater push for technology and traceability throughout the supply chain. Innovations like blockchain technology are being explored to create immutable records that can track a batch of limes from the specific tree it was picked from, through the packing house, and all the way to the United States port of entry. This level of transparency would make it easier for inspectors to verify compliance, and for importers to have confidence in their sources. These technological advancements will become the new standard for any exporter looking to do business with the United States, further cementing the importance of data and documentation in the produce trade. For American farmers, this new landscape presents both a challenge and an opportunity. While competing on volume with Mexico is difficult, they can lean into the locally grown and American-made marketing angles. There is a growing segment of consumers willing to pay a premium for domestic produce. U.S. growers can focus on niche varieties, organic production, and direct-to-consumer sales channels. This may lead to renewed calls for policies that support and protect American farmers from the intense pressures of the global market. Ultimately, the Great Lime Shakeup of 2025 serves as a powerful case study for the future of global trade. It underscores that access to the lucrative American market is not a given. It must be earned through a steadfast commitment to safety, quality, and transparency.